Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 27, 2022. Market is very volatile. When the market is very volatile, we got to go after great stocks to buy. So with that, healthcare is typically a very good defensive sector. It holds up pretty well then when there is high inflation. So with that, let's jump in and look at great healthcare stocks. Here we got an image here. Lilly, Eli Lilly. It's one of the great healthcare stocks. We'll look at Eli Lilly and many more. So with that, let's jump in. Look, from a market update perspective, we are in the fear zone right now. Look, we are in the fear zone. We are at 26 right now. I can see us coming, a little more down here around 20 or so. That's in the cards. That's why you got to go after great stocks. Don't go after stocks with a lot of debt. Go after great stocks which are profitable and doing pretty well. So with that, healthcare is a great sector to invest in when there is a fear about inflation. So with that, let's jump in here. Look, from a market update perspective, we got Centene, CNC, earnings beat. They also ups the EPS view. So the moment company beats and up the EPS view for next year, that's when stock will go higher. That's a good one here. And Pfizer and BioNTech, they seek the emergency authorization for booster for children 5 to 11. That's a good one here. Pfizer and BioNTech, they're doing great. So it's good to look at these companies and see if it's good to buy them. On the other hand, we got Universal Health stock got clobbered. They had an earnings miss and stock tumbled. And then you got Danaher. Danaher is one of my favorite stock. Right now it's down because there is a COVID-19 related restrictions in China that will impact the Q2 sales. That's why Danaher is down. It's a great stock to buy for the long term. And look, we got a one-day chart in the market here. Yesterday, market got market came down big time. Look, big downturn here, and Dow Jones was down by 2.38% or 809 points. That's a huge drop in Dow. And then you got your Nasdaq, again same story, big drop here. Look, Nasdaq lost 3.95% in a single day. That's a big drop here. And we got S&P 500, again a huge drop. Look, big drop here, and it dropped by 2.81. So when the market is so volatile like this, we got to go after great defensive names which are beaten down. Healthcare fits the bill, and even though economy is in a bad shape, folks also always have to take care about their health. That's why healthcare is one of the defensive sector. It's great to buy some healthcare stocks which are beaten down. So with that, let's jump in here. Look, from a top healthcare ETF perspective, keep watching here. We got performance here. We got here 10-year performance and 5-year performance. Many of these ETFs have done great. Look at the top one here, XLV. XLV is one of my favorite. It's a very steady Eddie type name here, and they will historically do very well during the inflation. Look, this one has done even, here it's done great here. 1 year 8%, not too bad at all. They're barely down from 52-week high here, just 7.8%. Did very well compared to S&P 500 and QQQ and so on and so forth. So that's why XLV ETF is one of my favorite ETF to weather the storm. They typically do very well. Look at the volume, 20 million shares traded. That's a good one here. Then you got XBI. XBI, as many of you know, this is very volatile. Look, they already lost 45% of their value. It's down 45% from 52-week high. It's very volatile. I like this one because when it comes down like this, it always gives you a nice bounce back. So you got to be a contrarian to like XBI here. They typically do very well from a bounce back perspective. Look, IV percentile is very high in XBI. That tells you you'll get a very good put premium. If you sell put options, way below current price here, which is 76. And we got a few more. I love IBB also. It's also a biotech play here. Look, it's down 32%. On the contrary, we got Cathy Wood here, Arc Genomic. Look, they're down 60%, one of the biggest drop here, mainly because Cathy is a little more aggressive. She goes after aggressive stocks. That's why she even goes much below the market or much higher than the market. But right now, with the market coming down, Arc Genomic is much below the current market. They dropped more. And then got a few more here. Medical device is another great sector to invest in. Look, medical device is not too much down here, just down 16%. Did pretty well compared to other biotech names here. It's one of the good segment to invest in, and these stocks will bounce back pretty hard. And then you got a few more here. We'll look at stocks at this point and go from there. So before you look at the stock here, look from a market perspective, very jittery market. Look, we got Dow Jones Industrial Average, pretty much volatile as you can see here. Came down, went up, came down. It's a trader's market. So at this time, it's trying to go higher. Look at the futures market. It's up 214 points here. Whenever it comes down by triple digit, it's always good to buy little bit, maybe say 2 or 5, buy some DIA or SPY, you will do well. So when the market drops big time, you can buy 1 or 2, and if the market drops again, you can buy more. Buying these ETFs like DIA, SPY, QQQ, you don't need to worry about single stock risk. That's why it's great to buy when the market comes down tumbling. Buy 1 or 2 and accumulate slowly. That's the great way to generate wealth. And look, Russell came below here, below the support level here, and just bouncing back. Russell is also good to buy slowly as the market drops. And then you got gold here. Gold is coming down, as you can see here, with the interest rates going higher, dollar getting strengthened. Commodities like gold and even crude oil. Look, crude oil is also coming down, trying to bounce back here. That's what's going on here. So at these levels, I would be slowly buying some gold. And even energy is okay here. Energy has got some geopolitical tension that could be a good tailwind for energy. That's why it's okay to buy some energy when it's down like this. And look, bond, after getting beaten down here, is trying to go higher. As bonds go higher, interest rates come down. That's what's going on here. But things can change if Fed increases interest rates here. Bonds can get further get sold off here, and interest rates can go higher. That's why you got to be careful with bonds, and bonds especially when they're beaten down pretty much. You don't know when it's the end, because mainly Fed is not buying bonds anymore. They're selling the bonds and tapering down. That's why you got to be careful with the bonds. All right, so now let's look at the top healthcare stocks to buy. Look, this is sorted by market capitalization. Stock at the top has got highest market capitalization. So with that, we got JNJ here, Johnson Johnson, one of the great company here, and stock is still doing well by looking at RSI, Relative Strength Index, which is a 14-day relative strength of the company. So if it is above 50, that tells you in last 14 days, company has been doing great from a performance perspective. So the moment you see 61, expect 1 day, 5 day, 10 day to be higher. So stock is trending high. The moment you see a higher RSI, you don't even need to look at the chart. Just by looking at the RSI, if it is above say 50 or so, stock is trending higher. That's what's going on here. In near term, stock is going higher, as you can see here. And we also have here performance. J&J has done great in 3 month, 6 month, 1 year, 5 year, and it's just barely down from 52-week high, just 1% down. The stock is doing great here. They got $31 billion cash, don't need to worry. Nice $19 billion free cash flow, and they do have debt. As you can see here, debt is $33 billion, but as you can see here, the debt to equity ratio is 0.5. That tells you they're pretty strong. The moment it's more than 1, I'm a little bit concerned here, but J&J don't need to worry. And look, from a next year perspective, both earnings per share as well as revenue, there is a nice acceleration. That's a good one here. Overall score is solid. That tells you the company is doing well. And they're also paying 2.5% dividend. I know many of you love dividends. This is a dividend aristocrat. And also look, their dividend pay ratio is 52.80. That tells you this dividend is sustainable. They can sustain this dividend. So if you're a dividend investor or even otherwise, J&J is a great pick here. You can just buy some J&J and just shove it away. You will do very well. You'll also get great dividend as well as stock appreciation. As you can see here, in 5 years they've done 7%. Not huge appreciation, but you got both appreciation as well as dividend yield. So with that, one of my top pick is UnitedHealth. As you can see here, this has done great. Look at the performance here. This company had done 218% in last 5 years. So you could just buy this company and shove it away. Right now, look, RSI is 46. That tells you stock is sold off in the near term. So you could buy some UnitedHealth here and just forget about it. And look, this company gives you nice 1.1% dividend, and dividend payout ratio is low. That tells you this dividend is very, very sustainable. And we got a few more, as you can see here. And keep watching the float also. The moment float is high, that means supply of shares is high. That's why I highlighted few stocks here in red. For example, Pfizer. If you see here, Pfizer has got a little bit high float. That tells you shares available to common public is a little bit high. It's a $5 billion worth float, which is a little bit higher compared to in J&J, UNH as an example. UNH has got a little bit lower float. That tells you stock can go higher because the supply of stock is less compared to demand. Whereas Pfizer has got more demand. That's why stock is trying to see where to go here. RSI is 38. That tells you stock is sold off. At these levels, you could buy some Pfizer here. Pfizer, as you can see here, it's got $36 billion total debt. And look, it's got debt to equity 0.5. That tells you they got enough money to pay their dividend. So it's not a big deal at all. And Pfizer, one thing to notice is, look, from an analyst perspective, for next year EPS growth and next year sales growth is negative. That tells you analysts are expecting this stock to do a little bit not so great compared to what it's doing right now. That's why it's got negative EPS growth and revenue growth for next year. But look, score is great here. They're doing well from an overall score perspective and pays a solid dividend. And dividend is not at risk with the low dividend payout ratio. And then you got a few more here. We'll touch on few stocks here. Look, Lilly is one of my favorite stock. It's a great one to buy here. Lilly is dropped off big time, as you can see here. Look, Lilly is the RSI is 44 here. Stock is dropped off big time here. And look, they also a little bit high on the debt load, 1.9%, but don't need to worry. This company will do very well. And look, they got a nice dividend also, and company has done very well from a 5-year and 1-year performance perspective. This is a great one to buy, take advantage. And then you got AbbVie. We did not talk about AbbVie here. AbbVie, look, its dividend payout ratio is a little bit high. That's a little bit concern for me. I love when the dividend payout ratio is less than 50%, but this one has got a little bit higher dividend payout ratio, and also they have a little more higher debt to equity ratio. And look at the debt load here. Let's look at AbbVie here. Look at the debt load. They got a total debt of $76 billion. Looks like this company has taken a lot of debt. That's one of the reasons I don't like it too much. It's a great company, but I think they should reduce their debt load. And we got a few more here. Novo is one of my favorite. This company has been doing great. Look at the performance. This company is also very prudent. They did not take on too much debt. Look, it's one of the lowest debt load in this healthcare area here. And this stock is also sold off big time here. So you could buy some Novo here, one of the great stock to buy. These guys are very disciplined when it comes to taking on debt. They got low debt load. And as you look through here, Novo also, they're paying out around 1.4% dividend, and dividend payout ratio is less than 50%. Pretty much safe here. And we got a few more here. Keep watching the debt load here. You don't want companies with huge debt load here. You want companies with a little bit lesser debt load. And also keep watching the float here. We want low floats here. We don't want too high float. And if you're a dividend investor, watch out both dividend yield as well as the dividend payout ratio. The moment you see very high dividend payout ratio, look here, AstraZeneca here, very high dividend payout ratio. This number could be a little more exaggerated. Not sure why it came up so high from one of the data source, but regardless, it's a high dividend payout ratio. And look, stock had not done great. It's done okay here, so you got to be a little bit careful with such companies here. It also has got a little bit higher debt here. And look at AstraZeneca here. Look, their debt ratio is 0.8, not too bad, but I would watch out for a higher dividend payout ratio. That tells you they're paying out too much dividend compared to their current earnings. And we got one more here with the high dividend payout ratio. I think it's right here, GSK here. GSK also pays out too much dividend. Dividend payout ratio is high here, and stock has not done well in 5 years. I would probably avoid this one here and go after the better ones, and keep watching 5-year performance here. There are some standouts, as you can see here. Few standouts like UNH, which has done great. You should go after such companies, especially because it's beaten down at these levels here. You got AbbVie, Lilly, and even NVO. Both have done great. All of them have done great. And then you got few more here. Abbott done great. Look, nice performance. You should go after such companies with great 5-year performance, but currently beaten down. And look, one of my favorite here, Danaher. It's one of the great stock, completely beaten down with the very low RSI 30 here. You could pick up this great company here. Company is firing on all cylinders, and they gave a cautious outlook. That's why stock dropped off here. Look, low float tells you that they're not diluting too much. And we got a few more with nice performance. Look, we got Anthem here. Anthem is a health insurance play, as many of you know here, and this also works. They've done great in last 5 years. And look, RSI is 51, tells you this stock is doing very, very well in the near term also. And we got a few more here. I love Intuitive Surgical. It's a great medical device play. You could buy this great stock, take advantage. And we got one more here, ZTS. It's into animal health. It's a great one to buy here. Nice performance. Stock is sold off with the low RSI. Look, both are low RSI candidates, have done great historically. All right. So with that, let's look at a few more here and go from there. List continues here. We are basically going with the market capitalization is in a descending order. I say, pay attention to the 5-year performance here. You want to go after the nice 5-year performance. And if you're a dividend investor, watch out for high dividend payout ratio. In this one, we don't have too high dividend payout ratio. We are good here. And as you scan through here, you got here Edward Life Sciences. Bar none, one of the great company in the medical devices. You could buy this great company here, and look, they've done great in last 5 years. And right now stock is RSI is 46, tells you it's a little bit sold off at these levels. You could buy this company here. And I love Regeneron. It's one of the great stock here. And this stock also got clobbered off late. You could buy this great company. Have done pretty good. Look, they've done 81% in last 5 years. It's a stable one here. And we got Vertex Pharma. It's one of my favorite stock. You could buy this one also. Look, it's got perfect score, 100 out of 100. And it's done great in last 5 years. And we got few more. HCA got clobbered when they announced earnings. Look, RSI is 31, completely sold off here. You could buy some HCA at these levels. You should see a bounce back as we go forward. And keep watching the 5-year performance here. We got one with great here. Look, Dexcom stock is beaten down big time. Continuous glucose monitoring. Look at the 5-year performance, has done great. You could pick up this great stock here, buy it on a discount sale at these levels here. And we got one more here, Align Technologies. It's about dental play here. I think it's a great one to buy. Stock is look, RSI 33 tells you stock is clobbered here. You could buy this great company here and go from there. And we've got Viva Systems. It's into healthcare information technology. Stock is clobbered. It's a good player. You could buy some Viva. It's a cloud platform for healthcare information technology. All right, so let's look at a few more and go from there. All right, so keep watching. We got a few more coming up. Market cap in the descending order, as you can see here. And watch out when there is a high dividend payout ratio. For example, Cardinal Health looks like they're paying out all their earnings in dividends. You should watch out that may not be sustainable. You got to watch out for such candidates. And keep watch on the float here. You don't want too much float on the balance sheet. I think here folks are a little more responsible, not too much float here. And keep watch on the next year EPS growth and revenue growth. You want the ones which are growing their revenue and earnings per share in the upcoming year, not the ones which are negative. For example, you got here LabCorp. LabCorp has got negative EPS for next year, so you should watch out for such candidates and go after positive EPS growth. And also look for 5 year and 1 year. If company has done great in last 5 years, there's a very good chance they can do well even going forward. So with that, we got one here with the West Pharma. They're also into cannabis, as many of you know here. 5 year performance is great. Right now RSI is 24, completely sold off here. This could be a bounce back type play. You could look at that one also here. As usual, look at total debt here. You don't want a huge debtors here. For example, you got one here, FMS. Look at the FMS. Look at the debt load there. They have a huge debt load here, $14 billion of debt. You should watch out such candidates. Look, it's not done well. Also, look at the historic performance, not done well. There's a very good reason. These guys are taking too much debt, as you can see here. And we got a few more with the relatively high debt. We got here LabCorp. We talked about that. And we got PHG here. PHG has got high debt load. Stock is completely down here. Stock is coming down big time. I think they got high debt load, and look, they got higher float also. That tells you supply of shares is high. That's one of the reasons stock is coming down. Look, it's down big time. 1 day, 5 day, 1 month, even 5 year it's down. You got to be careful with such names here. All right, keep a watch on the overall score. Higher the better. So I like the ones with the more than 80 are great ones. Higher the score, the better. We got Molina Healthcare here. Look, Molina Healthcare 99 score. Look, they've done pretty okay in last 5 years. 554. You could look at such names here. Right now RSI is 43. Tells you stock is sold off here. And we got one more with perfect 100 score here, GMAB, perfect 100 out of 100 here. And stock has done okay here, 80%. You could take a look at such names here. And look, we got a few more with the nice performance. We got BGene. Look at the performance, nice, 289%. You got to be careful. It's a Chinese name here. You got to be a little bit careful. Stock is sold off right now. And we got a few more with nice performance here. We got POD. POD has got great performance. Look, 458%. Probably one of the highest in this group here. You could take a look at such names here. It can also do very well. RSI is low, tells you stock is sold off here. And we got one of the highest performance right here, Horizon Therapeutics. Look at the performance in last 5 years. It's a great performance. And look, stock is sold off with the low RSI. You could pick up such stock here. Has got nice next year earnings growth as well as the EPS growth here. And nice overall score of 99. And as we watch through, we got few more with nice performance here. CTLT and Tech both have got nice performance in last 5 years. And look, you could take a look at such companies here and look RSI perspective. CTLT is completely sold off here, very low RSI. You could take a look at that one for a bounce back type candidate here. All right, so with that, thank you very much. Happy investing and trading. Please subscribe.